Ladies and gentlemen, good day and welcome to the AGI Greenpac's Q1 FY2024 earnings conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Sachin Popde from Dolat Capital. Thank you and over to you, sir.
Thank you, Carol. On behalf of Dolat Capital, I welcome you all to the Q1 FY24 earnings conference call of AGI Greenpac. Hope you all and your family members are staying safe and healthy. From the management side, we have with us Mr. Rajesh Khosla, President and Chief Executive Officer, Mr. Om Prakash Pandey, Chief Financial Officer, and Mr. Sandeep Sikka, Group Chief Financial Officer. Now I hand the floor to the management for their opening remark, and then we would have question and answer session. Over to you, sir.
Members of the management, over to you. You may please proceed.
I think we have missed the management.
Sir, no, they are very much connected. Management speakers, you all are connected to the call. You may please proceed.
Okay, Mr. Pandey has to speak.
Mr. O.P. Pandey, you may please go ahead, sir.
He connected, or else I'll speak it on his behalf. So good evening everybody and welcome to AGI Greenpac Q1 earnings call. We have already circulated our earnings presentation, which is also available on our website and the stock exchange website. We hope you have gone through the presentation and we'll be happy to answer any questions afterwards. We are happy to announce that we started the year with a positive note with a strong quarterly performance. Company's revenue from operation increased by 7% YOY and increasing to 522 crores in Q1 to 558 this year, despite a scheduled and a planned furnace shutdown for relining the 25-ton furnace. 140 crores, achieving an impressive 52% year, stable margins of around 25%. EBIT for the period amounted to 103 crores, a 63% increase on year-on-year basis with a EBIT margins of 18%. So basically, the overall performance improvement is attributable to various factors, including our emphasis on high-value-added products, our favorable product mix, market demand, and also the internal efficiencies on which we have worked on. The profit before tax for the period totaled 85 crores, increased by 55% as compared to the as far as the net profit for the period is totaling 63 crores, indicating a marginal decrease of 3.5% compared to previous year, mainly attributed to tax-related impact. Note of this is there in the results. The company had opted for exercise of a lower tax option under Section 115BA of Income Tax Act last year, which led to tax reversal in Q1 FY23 relating to various deferred tax expenses liabilities. So as a result, if you see Q1 of the last financial year, the PAT was higher than the PBT. Consequently, the tax expense and then profit after tax between Q1 FY24 and Q1 FY23 actually apple-to-apple comparable. And the net profit margin for the period stood at 11%. I would request Mr. Khosla if you can give a brief on the business and the operational performance, and then we can take Q&A. Thank you.
Thank you, Sandeep. Thank you very much. Good evening, ladies and gentlemen. I am delighted to share with you some of the key highlights of our company recent performance. During the quarter under review, our glass container business achieved remarkable growth, driven by a rising market demand, a more favorable product mix, and our focus on high value-added products. Even with the planned shutdown for relining of one of the furnaces, our glass container capacity utilization during the quarter was close to 90%. On the back of efficient planning, operational flexibility, optimized production, processes, and strategic inventory management. The substantial investment in digitalization and automation have further optimized our operations, significantly improving efficiency. Our commitment to growth, value delivery, and building a sustainable future is resolute. We harness our competitive advantage to ensure effectiveness and efficiency in serving our clients. Thank you very much, and we are now ready to take any questions from everybody.
Thank you very much. We will now begin the question answer session. Anyone who wishes to ask a question may press star then one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
There is some background noise, I think.
I'm sorry, it's from the line of Mr. O.P. Pandey.
Okay. Yeah, we can go ahead with this.
We take the first question from the line of Priyansh, an individual investor. Please go ahead.
Yeah, I have one question and two suggestion also. Regarding the question, the finance cost is compared to June 22. I'm comparing YOY. It has almost doubled. Although compared to March, it has reduced, but in June it was 8.3 crore. Now it is 17.9 crore. So what efforts are we taking to reduce the finance cost, refinancing or reduction of working capital and so on? So can you please explain on this one?
So basically, if you see the prime impact of this is on account of 2-3 reasons. One is the commercial production of 154-ton furnace has started. So basically, the interest and depreciation relating to that furnaces are coming through. Last year, there was because we have an ECB and that ECB is hedged. On account of exchange fluctuation, last year there was a gain of around 2.5 crore. And this year, there is a marginal loss which is there. So, plus apart from this, as compared to last year, if you see the overall interest rates have increased because of the overall inflationary trend. So, 1.5% interest rate increase has also happened. We actively monitor our treasury. Right now, the overall cost of debt is at around 7.7%, 7.75%. Weighted average cost of debt. But as the interest rates soften, we are very aggressive on this in terms of renegotiating with the lenders on this.
So can we expect some reduction in the coming quarters?
It is all linked to the interest rates, basically how interest rate flows.
No, but
if they come down, definitely we'll renegotiate with the lenders.
But if you allow me to go in a bit details of even for example this interest rate change or whatever, this impact of 2 crore, but here the impact is of almost 10 crore rupees. So I think there is a need to just go in detail at the company level to see that how we can optimize on this one or regarding the hedging or the forex cover, whatever required, because the amount is from 8 crore to 18 crore. So 2 crore, even interest rate change become only 10 crore. So still there is a jump of 8 crore. So this is one point.
Yes.
Okay. And my submission, the company has gone through this shutdown of 325 furnace, 325 metric ton furnace. So it's a material event. But I'm surprised that neither it's a shutdown notice nor its restarting notice has been given. In terms of the material event, as an announcement or as a disclosure to the stock exchange. So in future, can you please ensure that whenever any shutdown is being done or the furnace is restarted, a due intimation is going to stock exchange like other company, for example, is Andhra Paper. They have gone for shutdown. They announce 1 month before they announce, or even before starting the this one shutdown, they should start and when restarting should also be announced.
So basically, if you go through the transcript of our last results, which we did in the month of May, we clearly told that there will be a shutdown. The disclosures to stock exchanges, we are very high on the compliances to that. So we make all the disclosures as the requirements of the exchanges and also the requirements of the market. Apart from it, we always keep communicating, but I would request that if you can refer to our last investor presentation transcript. So we had stated that, in Q1, the sales and the quantities will be impacted because there is a planned furnace shutdown, which is a very normal part of the class of operating system. But definitely taking your point, going forward, if required, because we didn't, as a percentage, because the normal maintenance, it's not a capacity change. The exchange requires that the capacity changes has to be informed.
No, sir, I have already gone through the transcript and I know it was mentioned there, but that is not enough because that was only 6 weeks before or 4 weeks before. What I'm saying
we'll take care of it going forward.
Sir, when I'm saying that when you are really going for shutdown, so means it's going to impact our capacity. It's not only increase, there is decrease also, number one. Number two, when the furnace is shutdown is finished. So when we're restarting, so that's another material event which requires disclosure. So kindly, if you ask the concerned compliance officer to take it quickly, this will be really helpful.
Yeah, we take your point.
Okay. Number two, sir, today, there is an announcement that in case of any query, we can approach to your investment advisor, Churchgate. On 21st July, this was the announcement. But today, our representative called to the number, and I'm sad to inform you that the telephone operator did not even transfer the line to Anvita Raghuram or Raju Pandya in spite of 3-time request to him. Mr. Saqib Sheikh, who was the operator, he was just saying that is the board line and you can leave a message. So we left message also and requesting to that Anvita or Raju can call back. None of them call back us. So in your letter, you have very clearly mentioned that we can call Ms. Anvita or Ms. Raju Pandya on number so and so. So that number is useless, and the other company are also nowadays this appointing investment advisor, and they are giving the mobile number of the contact person in the investment advisor. And we have called many times, and the person has been very receptive to receive the call and then they come back. But in this case, there is an urgent need to take some action from your side, so that either they behave properly or we change the investment advisor.
Sure, point taken.
Thank you.
Thank you.
Before we take the next question, a reminder to the participants to please limit your question to 2 per participant. You may rejoin the queue for your follow-up. The next question is from the line of Nikhil Kada from Abacus AMC. Please go ahead.
Hi, sir. Thanks for the opportunity and congrats on a decent set of results. So firstly, just a couple of data points I need. If you can share what was the volumes that we did in this quarter, what was the EBITDA per metric ton, and what was the same for the specialty division as well?
So basically, we're not disclosing separate numbers in each of the segments as such. So what I can disclose as a part of this call is as a result of the shutdown, we lost around 25,000 tons of tonnage in the market during the period of the planned shutdown.
So if this volumes would have come in, what kind of growth would we have seen in our volume?
So on an average realization at around 37,000 to 38,000 rupees a ton and an EBITDA per ton of ranging around 10,000 rupees.
No, sir. What I was trying...
Yeah, please, Nikhil.
Yeah, sir, actually what I was trying to say is that if we would have made this 25,000 metric ton of business, what would have been the volume growth that we would have achieved?
What would have been?
It would have been around 80 crores or something.
So 80 crores of revenue was lost, basically?
Yes.
Yeah.
Okay. Understood. 10,000 metric ton EBITDA. Okay. And 37,000 was the realization, right?
Yeah, on an average realization basis. That's an opportunity calculation.
Understood.
And EBITDA and the impact on the EBITDA would have been maybe around 25 crores higher. So we made an EBITDA of 140 crores for the quarter. Mm-hmm. So if you adjust that opportunity cost during the shutdown period, the EBITDA would have been around 165.
Understood. And this does not include the specialty numbers, right?
So specialty numbers are already there as a part of the results in 140 crores.
Okay, fair enough. Okay. So just secondly, on the overall pricing scenario, now that we are seeing, the power and fuel cost sort of going down, how do you see the realization that we are maintaining? What is your view, whether we will see correction over there? Are the clients coming back to us with option of, revising the price downwards?
Rajesh, I would request.
Sure. The market has multiple price mechanism systems. Mm-hmm. One is a price mechanism system which is based on formula, which you might have seen that we have been harping on this issue in last 3-4 times, where we have been telling that the customers have been giving us whatever cost increase is there, they give us on a formula basis. So similarly, I think we have to adjust our prices once the fuel prices and other prices come down. We have adjusted and we will adjust. So this is our commitment, this is our formula, this is a transparency. So one thing is there. And on the other part of the business, which is not related to the formula-based price, it again depends upon demand and supply gaps. And thirdly, it also depends on the type of products that we are manufacturing. There's sometimes the fuel and these type of costs, they doesn't matter, and they just matter something. More things are there to which are impacting us. So it is quite a complex mix of so many things. But rest assured that if the cost comes down, so certainly the market will adjust accordingly. The same way any cost has gone up, the market had adjusted accordingly.
And sir, how much would be the formula pricing versus spot?
As we have already informed earlier also, almost 50 to 60% of our customers, they are with formula pricing.
Got it, sir. And just one last question on the finance part. While you alluded about the impact, was there any reduction in debt from 4Q to 1Q?
So if you see the debt last year on 31st March 2023, the total net debt was 523. Now we have a total net debt of 566. So that has slightly increased because we invested into this relining of furnace and the other thing which we did.
So then, any specific reason the debt came down from 4Q to 1Q?
Debt didn't come down.
Finance cost, my bad. Yeah.
Basically, in Q4, there are such set of entries like exchange fluctuation, there are some bill discounting charges and other things which are there. And the utilization also dropped down on an overall basis during the quarter. So as a result of which the interest rates have reduced. So it's a mix of a long-term debt and a short-term debt. So the continuity of the long-term debt is there, but in the interim, since the spend which happened on the relining, it happened in the middle of the quarter. So let's say for 1 month or 1.5 months, so less usage of the debt was there. So as a result of which, with the profits which we are earning.
Okay. So, is it fair to assume that the interest expense will remain in this range per quarter? It will go a bit higher?
It should remain in this range only, but slightly go higher because, as I said, some part of the debt was taken in the second half of the quarter. But then going forward, we'll have the incremental EBITDAs and the cash flows also. So more or less in this range, maybe 1 crore here and there, around that figure.
Got it, sir. Sir, I have one more question. Should I?
Please. Yeah, please continue.
Yeah, sir. So just last question on the power and fuel part. Do we expect any further improvement in the power and fuel expense, or do you think most of the benefits are more or less priced in?
Yeah, Rajesh, if you can talk.
Okay, let me answer. So there are two aspects on the power and fuel. One is the consumption and one is the price. So price impact is purely on the basis of whatever government announced the price, because fuel prices are more or less regulated by the government. So we have to follow with that. And otherwise also the world trend. Regarding the consumption part, there is a continuous exercise because of our sustainability efforts and even because of our cost-saving efforts, where we try to reduce the consumption of the fuel or the consumption per ton of the glass, whatever we produce, continuously. we have been engaging with the agencies, global agencies. We have been engaging with other consultants to reduce our fuel cost. So right now, these are the two things. The third thing is also important, which is the mix of the fuel. So right now, whatever is the mix available in the market, we are using those mix on our maximum advantage, but no any further type of fuel which is now going to be available in the future, which can impact our fuel mix. So there is no such thing as such. So only we can rely on the global prices, or I can say regulated prices. The rest, everything is a very linear type of curve, which is continuously going down, and the results are also showing the same thing.
Got it, sir. Thank you for the elaborate answer. All the best.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Sir, just reconfirming on the capacity now. So this 1,754 tons that you had get added by 100 tons after this debottlenecking, and is it done?
Yes, the capacity has been added since the whole capex got completed only on the back end of the quarter. So the utilization of capacity effect will come in the coming quarters.
Okay. So I did understand that you mentioned that container glass capacity utilization was 90%, which was 99% in quarter 4. So was there any fall in capacity utilization for the specialized glass and also the revenue on account of specialized glass as well?
No, there is. Sorry, Mr. Sikka, carry on.
Yeah. So basically, if you see the drop, when we say that the drop is there because the furnace 2 utilization during the entire quarter was not full. But if you see, on an weighted average basis on overall stuff, we are still operating ranging between 95 to 100% capacity utilization.
Okay, so this 90% you're calculating on the
Yeah, because the furnace was shut down for a relining. So during those periods, the capacity, like the furnace is just shut down, the capacity utilization, effective capacity utilization during the quarter was only 30%. So it pulled down the numbers for the rest of the
Okay. Understood, sir. Can you give some outlook on the either the capacity utilization that you expect in FY24 on expanded capacity or a volume growth outlook, either or whichever you are comfortable with?
So basically the focus today is... Yeah, Rajesh, please go ahead.
Okay. The expected capacity utilization will be the same range whatever we have been doing in the earlier year, which is anywhere close to 97 to 99%. So we do not see any unforeseen, or we don't see any negative impact on the market or anything as such. So we expect the capacity utilization full.
So which means you will have a volume growth of about 10% for FY24. Is it the correct assessment?
I think mathematically we can calculate that part. But from the operation side, I can always say that capacity utilization will be close to whatever we have been doing in the earlier year.
Okay. Lastly, sir, on the etching, before that, just one more question. The beer bottle and the soft drink bottle, what is a portion of your container glass business?
We do not disclose segment-wise revenue or segment-wise share of that. So we keep a confidentiality on these matters. But I can say like that, because since you have asked the question and I'm answering for the sake of answering, the beer quantity is quite large as compared to our capacity, and soft drink is small because soft drink market is not a very big market. It's a growing market. It's a new market which has come out of sleep after a long, long time.
So seasonality-wise, will quarter 1 and quarter 4 will be a bigger revenue, or you will have a similar capacity utilization all through the year? Or there is no seasonality?
Sir, thank you very much for our customers, or I can say consumers. Earlier, they used to drink a beer only in some hot season and summer season. Now, throughout the year, there is a party. So thanks to the Indian economy, which is doing quite well, and it is all 365 days. So that has really impacted us to remove the seasonality in the beer market also.
So we'll have an equal capacity utilization throughout the year, right?
I'm not saying 100%. I'm not saying a flat curve, but quite close to. So, yeah.
Yeah, quite close to any 5% variation year and year is okay, but
see, you are asking a question of the future. So regarding a future, I'm extra.
No, not future. I am saying in history you have seen that, or
the H2 consumption, whatever H2 consumption is going on, it is as per our thinking. There is not much of the fluctuation we are able to see now.
And last, guys have said the exchange that transaction is now being considered. Would you now like to share some details on this acquisition from the NCLT?
No, still the transaction is pending with the adjudicating authority. There are litigations going in NCLT and NCLAT. So we are restricted under the confidentiality not to talk about it.
Okay. And last quarter, in quarter 4, in your comment, you had mentioned that you will grow 15 to 20% in top line in FY24. Does that hold true, or there are any changes there?
No, we are still holding on the same.
Oh, thank you very much and all the best.
The growth of the first quarter, because please read it with the notes which is there to the thing that there is a capacity shutdown and we have disclosed the quantity also. So you can calculate the impact.
And any one-off cost in the P&L because of the capacity realignment shutdown? Any cost which has come in the P&L which will not come next?
So EBITDA margins are consistent. So there is no one-off cost.
Okay. And any reason why you guys in the quarter 4 said 22% margin is the margin in the business?
So you can't predict, so if you ask me a question, what will be the EBITDA margin on September, it's too difficult.
No, not September, sir. For full year number for FY24.
Sorry to interrupt.
So that's a guidance, that's a broad guidance given under the circumstances of, at that particular time. And everything changes. So let's say if I ask what will be the Sensex, 2 years down the line, or nobody can predict that. Everybody will try to guesstimate on the basis of the current market environment. So we give guidance, but I think we always put a disclaimer with that guidance that don't measure us on a quarter-to-quarter basis. So we run our strategy, and we are running our strategy successfully and achieving our goals which are set in this as a part of the strategy.
Okay. Thank you very much, sir.
Thank you. Before we take the next question, this is a humble request to all participants connected. Please limit your question to 2 per participants only. Thank you. Next question is from the line of Sanjay Shah from KSA Securities. Please go ahead.
Yeah, good evening, gentlemen, and thanks for opportunity. So can you highlight upon any new value-added products where we have been focusing to improve our business and margin and even new verticals? Is there any development on that side?
So Rajesh, I think we can talk about 154-ton furnace, if you can take it.
Okay. So I divide your question, or I can divide my answer in 2 parts. One is we have developed and added a new segment as such. That is one part. And second is with the existing one, are we doing any further value addition to create some more value-added products? So these are the 2 things I divide your questions like that. So in the first case, certainly we have already started our 154 furnace, which is into high cosmetic, perfumery, and high-end liquor. So which itself is a very high-end segment, and it is going to give a result, and it is giving a result. So coming back to the second part, within the normal framework, are we doing anything more to create a value? Yes, we are doing it. There are so many micro segments we are trying to create. We are working closely with our existing customers, with our existing segments, where we are trying to create some with the creative designs. We are trying to work out with the micro segments. We are trying to work out with the new segments which have been dying for a long time and giving them the new, we have a creative design department also, we have done that. And now we have a design center, and as well as decoration, full setup is there. So even the normal bottles are decorated. We are also developing a lot of colored bottles for the various high-end segments, which are the global players. So those are giving the results of that. So these are all some value addition which are happening within the commercial glass, which we have been serving the market earlier.
Okay, so in this specialized glass and commercial glass, what addition we can see on realization side? Will it be possible to share? Because We have been doing around 38,000 per ton. So what incremental we can see
almost
from that?
it is 1.7, 1.8 times higher than the normal glass.
But that's really helpful, sir. Really helpful. And so I don't have any question, but one suggestion. We need some good presentation from you. This presentation doesn't cover much of the things, and many of the questions have to be asked by all analysts, which could have been avoided if you could have mentioned shutdown and what loss of revenue or that would have been really helpful to us.
Sir,
Point noted.
we are committed to give the best of the results to all you people, and in all of our efforts, we try to maintain those confidentialities which are important to bring the results and not open up to our competitors. So within that purview, so we will try to work out maximum.
Appreciate, sir. Thank you and good luck to you.
Thank you.
Thank you.
Thank you.
The next question is from the line of Abhishek Maheshwari from SkyRidge Wealth. Please go ahead.
Yeah, thank you for the opportunity. Couple of questions. So we are noticing that the realizations have remained more or less stable compared to previous quarters, despite the falling costs. So could you talk about supply chain? What are the what is the current supply chain situation like? The cost of soda ash, sand, and furnace oil, and how are they impacting the realizations on final products?
Okay. Realization and cost are they are weakly related. So, and as I told in my earlier answer, 50 to 60% of our prices or our customer, they are attached with us on formula-based pricing. So it means any cost goes up or cost goes down, accordingly it impacts the realization. So now the whole trend is towards the lowering of the cost side. So it is certainly going to impact on the realization part. I'm not saying it is linearly proportional, but it is somehow related in a complex curve. Prices of soda ash have come down and are further coming down. It again depends upon the global demand and supply. The global demand and supply today is relating that soda ash prices are weakening. But then again, there are so many more important factors. Sometimes what is going to happen if the soda ash price weakened, some plants may close down and again the prices can fall off. So again there cannot be a very straightforward answer. But yes, as on today the prices have weakened and accordingly the cost has come down and accordingly the prices have been adjusted.
Noted, sir. And so secondly, a broader level question. Say if you would like to, take up an expansion program once again in your company in the future, do you have enough land in your current facilities to accommodate that expansion, or will we need to set up a new greenfield?
As you know that our acquisition of HNG is under consideration and the matter is in the court. So probably once that is settled and hopefully if we are able to get everything, so there will be a huge jump in the capacity part, and that is one part. And secondly, even after that, whenever we want to expand, so we will have a lot of land banks with us. And even if it is not there, it is not restricted to that level. So we can always buy the land, so it is not a problem for us.
Sure.
Because glass being a voluminous items, so it is not important that wherever you have a land, you have to expand accordingly. We have to be close to our customer because that is how the freight and the sustainability efforts can be maintained. So land is not important in the business of glass.
Noted, sir. Sir, lastly, just I know you cannot share any intimate details regarding the HNG deal, but any probability of getting the approval or timeline, anything that you can share on that front?
So most of these are processes which are run under the various legal authorities like NCLT and CLAT. So in the month of July, we had a continuous hearing in NCLAT on one of the matters. So we are hopeful, subject to, how fast the dispensation happens. We are very fairly hopeful that Q3, I think this transaction should be able to complete. But this is again contingent that, there are no more litigations, by the existing subset of stakeholders in HNG. and this is purely based on that. But we are very hopeful, and we are ready actually to take it on as soon as the approval comes.
Okay. Thank you for that, and all the best for future.
Thank you. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello, good evening, sir, and thank you so much for taking my question. So some of my questions have been already answered. So I just wanted to ask about our margins. So our current rate of margin would be sustainable, or due to our changing in cost, maybe we have a lag effect and somewhere the margins could come down? That's my first question, sir.
So Rajesh, you can take.
Yeah. As I informed in my earlier answers, we are having a formula-based pricing system with our customers. When the cost goes up, the realization goes up, and the cost goes down, realization goes down. It clearly means that we should be able to protect our margins to a reasonable level with this type of formula, and that is the purpose of formula. So I hope so that with the commodity prices of the input or supply chain prices, if they go up and go down, they should not impact our absolute margin in any of the cases. They should not. But rest all depends upon the total demand and supply and the market situation which exists on the global level.
Okay, sir. That helps me. And sir, if I understood correctly, so we had 154 tons increase in the start of the year, start of the calendar year, and another 100 tons right now. So combine these two will drive revenue further than maybe 15%. Are we being a bit more conservative in that sense, or is it that realization may bring the top line a bit, might be a bit of drag on the top line? That's the only question. Hello.
Yeah, Rajesh.
In fact, I have not understood the question exactly.
So basically, I'll answer this question. So what I think the way I've understood is you're saying that where is the future growth going to come from? So the future growth is going to come from many factors. One is 154-ton furnace, which is under the process of full loading. It is not yet fully loaded because it's based on the high-end customer acquisition. We have additional capacity, as I told initially, that will be loaded. Then we are working on various number of initiatives that how we can further debottleneck the existing capacities. Not only that, work on the improved product mix so that, we move the value chain up the value chain. So these are the various initiatives. This is which, we form a opinion that somewhere around 15-18%, in a range will continue to grow.
Okay, sir. That helps me a lot, sir. Thank you so much, sir. All the best for future quarters, sir.
Thank you. This is a reminder to the participants before we take the next question to please limit your question to 2 per participant only. The next question is from the line of Yash Tantewadia from Tante Equity Research. Please go ahead.
Yeah, hi. Congratulations on a good set of numbers. My question is regarding your high-end specialty glass. Last quarter it was at a capacity utilization of 65-70%. In quarter 4, can you share what was the capacity utilization for this quarter?
It's almost in the same range right now. So.
And how do you see this scaling up in the next financial year?
So Rajesh, I think I request you to take this and that's how the capacity utilization.
Okay. In the case of glass, is not practically a commodity, and particularly a high-end glass, a specialty glass is not commodity at all. Where the customers, the material is made exclusively for the customer, and they work as a project with us on that. In that case, there is a process where the customer will come, they will audit the plant, they will see, the samples will be drawn and they will be taking, and there will be some trial runs, and then the final order will come. So all these have a time lag, and then you manufacture the molds and specifically mold, and then again they will see 1 or 2 commercial runs also, and then the things will fall on stream. So right now we are on stream. Right now everything is intact. Everything is going very smooth. Everything is in line, whatever we have been thinking. But yes, the exact numbers or the appreciable numbers, they will start coming in next few months. because it takes a time to imbibe the things and the customers to simply shift from A to B and to us. Because earlier also they have been buying from somewhere at least. So they are shifting from ABC to AGI. So obviously everything will take its time and everything will take its process.
On the best guesstimate with the demand coming in, where would you guess the utilization can head to in 1 year? Obviously, I'm not holding you to the number. I just want to guesstimate.
I think so. I think so. Now only 3 quarters are left out. So certainly we are going to see the peak soon.
And your high-end specialty class, what is the percentage of the volume compared to your whole glass manufacturing business? What's the percentage?
I think the volume is quite known in the public domain. So it is close to 154 ton plus minus 10% here and there, because sometimes the capacity runs little higher also. And overall capacity is known to you. It is 1600 tons plus 154. So it's out of 1750 or 1760, it is 154 or 160 ton.
Okay. Also, you just said that you pass on the cost benefit also, and when the raw material pricing goes down, you pass on that benefit to your clients as well. So I think silica prices, if I'm not mistaken, silica and soda ash prices have come down constantly in the last 2-3 quarters.
No, I don't think so. I'm asking you. The price of silica sand.
Okay.
The price of the price of silica sand has not come down. At least it has not come to our notice at all. And in case of silica sand, there are 3 parts of the silica sand costing part. One is the cost of material, which is a little bit commoditized. Second is the processing cost, and third is the transportation cost. So these are the 3 type of costs which added up to make a silica sand pricing system. And what the commoditized cost might have come down a bit here and there, but that area is too small to get impact on us.
So what percentage of your entire cost component comes from soda ash and silica?
I think so. I may like to reserve my answer on this issue, because then it will be revealing my costing details, which I don't think so. It will be right at my part.
Okay, thank you. I'll come back in queue. Thank you so much for answering.
Thank you. The next question is from the line of Sri Shankar Radhakrishnan from InCred Capital. Please go ahead.
Good evening, gentlemen. My quick question, some of the questions got answered earlier. What is our outstanding borrowing today?
Sorry, go again. What is the?
Outstanding borrowings.
Outstanding borrowings, the figure we have already told. It is a figure of 566 crores.
Okay. And you mentioned about the HNG wouldn't like to come in because it is still under case. So a quick question though, still HNG is run by whom? The old balance?
So National Company Law Tribunal, Kolkata has appointed a resolution professional, and it is being run by the resolution professional along with their respective advisors, which the Committee of Creditors have appointed. So they run the company.
They run it. Okay. You did mention about when you expected all these things a resolution to happen or a solution to be found, etc. It was not quite clear to me. Did you mention that you are expecting to be sorted out in the next couple of months?
Your voice is not clear, but I think as far as I could understand your question. So what I stated was based on the outcome of NCLT and NCLAT and no further litigations by the stakeholders of HNG on the process, we feel that the transaction should get culminated in quarter 3.
Quarter 3. Okay. Thank you. Thank you very much.
Thank you. The next question is from the line of Pramod Dagi from Unifi Investment. Please go ahead.
Yeah, thanks. Thanks for the question and congratulations for the good set of numbers. You just said that there is an impact of 25,000 metric tons because of the realignment. So you are talking about the sales volume, or you are talking about the production volume? That impact was on the, or was it a year-on-year impact, or was it compared to the last quarter number?
So this is the impact on the sales. So basically, if you see our sales growth is 7%. So had we sold 25,000 tons more, the sales would have enhanced, and also the EBITDA would have increased. So this is relating to the quantum of sales which you lose when you shut down the furnace for a period of relining, and this relining happens after a period of 9 to 10 years, which keeps the furnace life extended, and it keeps the overall cost also in the control.
Okay. And secondly, just one more follow-up question on what you said. You said that because of the formula pricing, the absolute margin, which I believe that not the percentage term, but in the EBITDA per ton will be more or less stable because of the formula-based pricing. Is that understanding right?
See, the reason of formula pricing in any of a commodity, in any of a business, is to protect the margin and to pass on the fluctuation on the raw material side or the input side to each other. So this is the basic formula or the basic fundamental on the formula-based pricing. And we are also following the same.
Okay. Thanks. That's all from my side. Yeah.
Thank you. The next question is from the line of H.C. Daga from Daga Associate. Please go ahead.
Yeah. Good afternoon, and thank you for giving me an opportunity. This time that you have in your presentation that you have changed the income tax base and you have adopted the new lower rate under 115B AA. But I was going through, and then the impact of this change in Q1 FY24 is 21.83 crores compared to Q1 23 is 10.67 crores, which means that our tax liability, including the deferred tax and the remeasured tax, it has gone up by the 11 crores. Is it correct? Am I clear?
Your question is clear. I'll answer like this. Till 31st March 2022, our effective tax rate was around 35%. Government has given options to corporates to come for the lower tax rate, but we have to give away certain, deductions. So we, from 1st April 2022, we opted for a lower taxation rate, so which makes the effective taxation rate around 25% now. But the historical, because since we do a lot of investment into capital assets, so the deferred tax liability was being calculated at the tax rate of 35% in 31st March 22. And when we shifted to a newer tax rate, which is a lower tax rate, there was a reversal of deferred tax liability, which means the deferred tax liability which got accumulated over the years, it was reversed in Q1 of financial year 2022-23. So if you see the results of Q1 of last financial year, our PBT was 55 crores and PAT was 66 crores. PAT was higher than PBT because of the reversal of deferred tax liability. This is despite the fact that we paid around 14 crores as current taxes also. So ideally, if you want to see an apple-to-apple comparison, so on 55 crores last year PBT, you mark 25% tax, which would result in a PAT of around 41 crores for an apple-to-apple comparison. Against that 41 crores of profit after tax last year, we have now 63-64 crores as profit after tax.
Okay. So now going forward, that our tax liability under the new regime would be the 25%, and then our
yeah. So you have to see an apple-to-apple comparison. So I'll reiterate again for the entire set of people. So Q1 results of 2022, on the PBT of 55 crore, you calculate 25% tax. which should lead to a PAT of 41 crores with 25% tax rate. And as compared to, the current quarter, which is 63 crores, which is almost 50% higher.
Thank you. The next question is from the line of Karan Sanwal from Niveshai. Please go ahead.
Hello, am I audible?
Yes, sir, you are. You may please proceed.
Yeah, thanks for the opportunity. Sir, just wanted to confirm the debt level that we talked about, 566 crores. Was it at a net level or a gross debt?
This is the net debt.
And what would be the gross debt?
Gross debt, just 1 minute. The rest are fixed deposits. So basically, if you see, we have a fixed deposits of 200 crores odd. So if you want to work on a gross debt, add 214 crores to that.
Okay. And I just wanted to confirm that have we started the relining of the furnace that was shut down for relining? The operations have been started, right?
Yes, it has started.
And the capacity utilization we talked about, the specialty glass division was at 65 to 70%.
Yes.
And what about the container?
I'm not able to hear your voice clearly.
What about the other division apart from the specialty glass?
Sorry, I think you keep your mic a little bit away from your mouth and we should be able to hear you.
Yes.
Yeah, please go ahead.
Yeah, so I wanted to ask what was the capitalization for each segment. So for specialty glass, we have mentioned it is around 65 to 70%. So what about the other?
Others, we have already stated that if you net off the furnace which was shut down, we are already operating at 95%, 97% capacity utilization. Since furnace was shut down, so that shutdown furnace for the quarter doesn't make that relevant. But we utilize to an extent of 30% to be and we can see the whole quarter.
Oh, okay. Great. Thank you so much and all the very best.
Thank you.
Thank you. Well, ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing remarks. Over to you all.
Thank you, everybody, for joining us on the call today. I think good set of questions and good set of suggestions also which has come through. We'll try to incorporate as much as possible. So our idea is to be more communicative. But within the guidelines of confidentiality, I know market is expecting some answers on our acquisition, but our real apologies, like being bound by the confidentiality is difficult to answer those questions. But happy to take any questions, at any time. Thank you very much.
Thank you. On behalf of Dolat Capital, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.